everyone, welcome back to channel. I hope you are doing great today. Let me start with a small story. Imagine you walk into a building and step into an elevator. Inside the elevator, there are only two people, you and well-dressed investor who clearly understand money. The elevator ride lasts just 30 seconds. Before he exits, he asks you one question. If you had to choose just one place to put your money today, what would you invest? Crypto, stock, or real estate? Most people freeze at this moment because they don't want to invest, but they don't know how to decide. That's the real challenge of the modern investing. Too many choices, too many trends, too much noise. So today, instead of talking about hype, I want to talk about something practical. What if the smartest answer to do at that elevator question is not choosing just one market at all? And this is where something called Corex index become interesting to explore. So first of all, guys, what is the problem with the big one investing? Let's look at the most people invest. They choose one asset and go all in. One friend buys only crypto, another friend believes only stock or the safe, and someone else trusts only gold. Each person believes their choice is smartest. But here is the problem: financial smart move in the cycle. Crypto can rise quickly, but it can also drop quickly. Stock can perform well for years and then enter slow periods. Commodities like gold move differently depending on global condition. When all your money sits in one place, your entire financial outcome depend on that one market. That's a lot of the pressure on a single decision. So, how experienced investors think differently? Now let's imagine something else. Instead of putting all your money into one opportunity, you divide it across multiple sectors. A portion in metals, a portion in funds, a portion in digital assets, maybe even exposure to early stage companies. This is how institutional portfolios are usually structured. Not because they want the future perfectly, but because they respect uncertainty. Diversification is not about the chasing the best market. It's about preparing for multiple possible outcomes. So I'm going to introduce the idea behind the Corex Index. This is where the concept behind Corex Index comes into the conversation. Instead of asking an investor to pick just one opportunity, the model focuses on a basket style allocation approach. Meaning capital may be distributed across the several different categories such as pre-IP opportunities, precious metals like gold and silver, ETFs, and structured fund cryptocurrencies, other diversified index style assets. The goal is here not to rely on one market trend. This goal is exposure to multiple growth sectors simultaneously, which means to portfolio isn't dependent on the single industry performing well. Why pre-IPO access get people curious? One part of the diversified structure that often catches the attention is pre-IPO exposure. Before companies go public on the stock exchanges, they sometimes go through early funds stages. Historically, those opportunities were most available to venture capital firms, institutional investors, high net worth individuals. Retail investors usually enter the story much later after the company was already public. Of course, early stage investment carry risk. Not every startup succeeds. But the exposure of the phase of growth has always been interesting to the investor because of some biggest company expansion happened before public listing. So, guys, another question is ask. People ask is about the participation levels. Some investment models outline perform target based on allocation tiers. For example, participation between the $100 and $5,000 maybe target performance ranges around 6% monthly, depending on portfolio activity. Participation between 5,000 and $1 to the $10,000, the target may ranges around 8% monthly, guys. And after that, high allocation may scale toward to the target around 10% monthly, depending on the assessed and exposure too. And after that, guys, here are the most important to understand is something clearly. There are target projection, not guaranteed returns. Actual outcome depend upon market performance, allocation strategies, and assessed behavior. A responsible for investor always consider both protection and the risk. Another interesting feature in many modern platforms is the community element. Some structures include referral reward system where participants who introduce others may receive incentives. For example, a certain model mentioned referral rewards to 5% depending on the platform terms. However, beyond the incentives, communities play an important role in the how people learn about investing today. People share strategies, discuss market trends, and explore new models together. So let's back to the elevator scenario with the with you have the 30 second to answer the investor. Where would you put your money? Instead of saying only crypto or only stock, a more thoughtful answer might be I would rather participate in a diversified structure across multiple markets because the modern investing is slowly shifting from guessing in the part winner to building smarter exposure. So, guys, now I want to ask you something. Imagine the elevator moment happens to you. You have 30 seconds to answer. Would you choose one single investment, or would you prefer a diversified approach like an index style model? Drop your answer in the comments. I am really curious to see how this community think about investing. If you enjoyed the conversation, that's the breakdown financial ideas in the simple and realistic way. Make sure to subscribe the channel. Thanks for watching and see you all in the next video.